Hey guys, my name is Ken. Today we are talking everything about investing in growth stocks. This can be a great way to earn life-changing wealth in the stock market. The key, of course, is to know which growth stock to buy and when. To help you get started, I'm gonna give you a handy guide to growth investing. With these tools and strategies, you'll be able to position your portfolio for long-term success with growth stocks. Grab the like button and invest in subscription to the channel. You are also welcome to support the channel. All the links are down in the description. So what is a growth stock? Growth stocks are companies that increase their revenue and earnings faster than the average business in their industry or the market as a whole. Often, a growth company has developed an innovative product or service that is gaining share in existing markets, entering new markets, or even creating entirely new industries. Businesses that can grow faster than average for long periods tend to be rewarded by the market, delivering handsome returns to shareholders in the process. And the faster they grow, the bigger the returns can be. Unlike value stocks, growth stocks tend to be more expensive than the average stock in terms of metrics like price to earnings, price to sales, and price to free cash flow ratio. Yet, despite their premium price tags, the best growth stocks can still deliver fortune-creating returns to investors as they fulfill their awesome growth potential. To provide you with some examples, here are 10 excellent growth stocks available in the stock market today. One of them is Shopify from e-commerce industry, showing 3-year CAGR of 46%. Another one is Alibaba, showing 35%. Square from digital payments, 43%, 3-year CAGR. Also, you can see Mercado Libre, Facebook, JD.com, and well-known Netflix, Amazon, Salesforce, Alphabet, which show above average growth in the stock market. As this list shows, growth stocks come in all shapes and sizes. They can be found in a variety of industries, both within the US and international markets. In fact, while all the stocks on this list are larger businesses, smaller companies can be fertile ground for growth investors too. A great way to invest in a wide variety of small cap growth stocks is via an ETF such as Vanguard Small Cap Growth ETF. The ticker is VBK. This fund tracks the performance of the CRSP US Small Cap Growth Index, which gives investors an easy way to invest in roughly 500 small cap growth companies all at once. Importantly, this ETF has an ultra-low expense ratio of 0.07%, meaning that investors will receive nearly all of the fund's returns, with only a small amount in fees going to Vanguard. In fact, an annual expense ratio of 0.07% equates to only 70 cents in fees per $1,000 invested per year. Isn't it great? In the next few minutes, I'm gonna tell you how to find these growth stocks. To find great growth stocks, you'll need to 1. Identify powerful long-term market trends and the companies best positioned to profit from them. 2nd, narrow your list to businesses with strong competitive advantages. On a 3rd step, narrow your list to companies with large addressable markets. Companies that can capitalize on powerful long-term trends can grow their sales and profits for many years, generating wealth for their shareholders along the way. Such trends and the companies that can help you profit from them include e-commerce, for example. Amazon and Shopify are well positioned to profit from the US and many international markets. Another example is Alibaba and JD.com. These companies meanwhile dominate e-commerce in China, and Mercado Libre holds a leading share of the online retail market in Latin America. Second stream is digital advertising. Facebook and Alphabet, aka Google, own the lion's share of the digital end market and are poised to profit handsomely as marketing budgets shift from TV and print to online channels. Another great stream is digital payments. Square is helping to accelerate the global shift from cash to digital forms of payment by allowing businesses of all sizes to accept debit and credit card transactions. The next great direction is cloud computing. Computing power is migrating from on-premise data centers to cloud-based servers. Amazon's and Alibaba's cloud infrastructure services help make this possible, while Salesforce.com, aka CRM, provides some of the best cloud-based software available today. And here the cord-cutting and streaming entertainment. Millions of people are canceling their cable subscriptions and replacing them with less expensive and more convenient streaming options. As the global leader in streaming entertainment, Netflix offers a great way to profit from this trend. And here I'm gonna tell you the key. The key is to try to invest in these types of trends and companies as early as possible. The earlier you get in, the more you stand to profit. However, the most powerful trends can last for many years and even decades, giving you plenty of time to claim your share of the profits they create. Next thing you want to do is prioritizing companies with competitive advantages. It's also important to invest in growth companies that possess strong competitive advantages. Otherwise, their competitors may pass them by and their growth may not last long. Some competitive advantages are, for example, network effect. Facebook is a prime example here. Each person who joins its social media platform makes it more valuable to other members. Network effects can make it difficult for new entrants to displace the current market share leader, and Facebook's more than 2 billion users certainly make it unlikely that a new social media company will displace it. Size can be another powerful advantage, so pay attention to scale advantages as well. Amazon is a great example here, as its massive global fulfillment network is something its smaller rivals will find extremely difficult to replicate. Next thing is about high switching costs. Switching costs are the expenses and difficulties involved in switching to a rival product or service. Shopify, which serves as an online retail operating system for more than 1 million businesses, is a great example of a business with high switching costs. Once a company begins to use Shopify as the core of its online operations, it's unlikely to go through the hassle of switching to another competitor, right? So there you go. And lastly, you'll want to invest in businesses with large addressable markets and long runways for growth still ahead. Industry reports from research firms like Gartner and eMarketer, which provide estimates of industry sizes, projections for growth, and market share figures, can be very helpful in this regard. The larger the opportunity, the larger a business can ultimately become. And the earlier in its growth cycle it is, the longer it can continue to grow at an impressive rate. Let me know in the comments which growth stock you got on your portfolio. I read all the comments and really like replying them. Here are more other videos about personal finance and investments. Make sure to subscribe to the channel, like the video, and hit the notification bell. See you in the next video.